Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy. Alright folks, here we are after market close on Monday, November 8th. We're going to take a look at SoFi today. So SoFi heading into earnings in just a couple of days, and so I wanted to basically get an update here on the daily chart. We'll quickly take a look at the intraday and just point a couple things out, and then we'll flip over to the data and some earnings, I guess, expectations that I have. It's not going to be anything earth-shattering, and I'll kind of explain why when we get there, but let's hop right in. So on the daily, to me, SoFi holding up really well, kind of forming or putting in a bit of this secondary cup and handle, which we were talking about in the last couple of videos. So you see the upper lip of the cup here matching the other lip of the cup here, and obviously this forming the hollow portion of the cup here. And then putting in a handle, and like we had talked about, if it wants to sort of take off from this point, to me it's put in enough of a handle at this moment. So if we look here, the low on this day was 1914. So we go 1914 and bring this up to our highs here, just shy of our targets. And so this puts us down at the 236 retracement level, which to me is fine. And I had said, either we could see a bounce here or at the 382, but I wouldn't want to see it go any further than this purple box. And so whether or not it's going to put in a bit more of a handle here or not is obviously to be seen, but it could certainly take off from this point on. Now I've been sent several other charts where folks are sort of postulating on a drop after earnings and then a recovery afterward. It's certainly possible. I'm more looking at this cup and handle formation that we're talking about right now. I'm looking at all of this price strength that we've seen lately, looking at the volume holding up really well. Ever since this drop after earnings, the volume has just been in a nice, relatively upward trajectory. And to me, it's looking pretty strong. It's breaking, it broke. I know I'm reiterating a bunch of things here, but just kind of pointing out why it looks more bullish to me. This weekly trend had broken the downtrend resistance there. It's keeping pace, shockingly, with this really steep uptrend support. So, the flip side of that is, of course, since we have had such a run up into earnings, could there be a reaction to earnings that, hey, what you're telling us here has already been priced in and actually sort of doesn't even quite meet the expectations that we've priced in, and so we're going to sell off? For sure. Could there be some surprise in earnings that's not positive and it sells off? Sure. But I think rather than particularly like an Elliott wave theory, like fourth into fifth movement or something like that, I think that it's more going to just be a reaction to whatever comes out of earnings, and that it's then going to amplify whatever the chart setup already is. And so to me, it's a really bullish chart at the moment. And so if things are on par with what folks are expecting, I think it will just throw gasoline on that fire. And if it is a letdown, it'll be a bigger than expected letdown, because it'll then be seen as like overextended and sort of rich beyond its years. And so that's kind of like what the TA is obviously what I focus on, but I think this close into earnings and with this much sort of on the table, and this much having been priced in potentially, I think it's just going to be a reaction to that, and then we'll have to play the setups that we're given after that fact, much like we did here. And to me, it's just that'll be that. But that's what I'm looking at on the daily still, is looking at this cup and handle formation to the extent to which it matters this close to earnings. I'll just say that. On the intraday today, if you were playing anything, really choppy, right? Just chopping around the VWAP a bunch. Catching some sort of resistance mostly at this 2289. This potentially, faking some folks out. Didn't look like it was going to sell off hard into close because you had a nice sort of run up here and then confirmation bounce right off of that 2289 that we had put in there. But, like I said, wacky things happen around earnings. And so just like keep that in mind as you're trying to figure out what your proper risk to reward ratio and positioning is and what that means around earnings. Just keep in mind all sorts of wacky things happen around earnings. So don't want to downplay that at all. I saw this showed up on Ortex's news feed today, and this is just a little bit of like what to expect from SoFi's earnings. This is from Zacks. So Zacks consensus estimates for the revenue is pegged at 263.16 million, indicating 13.9% growth sequentially. Top line is likely to have benefited from strength across all three of SoFi's business segments: lending, fin services, and the tech platform. Estimated loss per share is projected at 11 cents, which I actually think would be really solid. 77% growth. And then they get into all this stuff. I don't know what a Zacks rank of 3 is, but whatever. So I thought that this is sort of interesting, but certainly you can poke around and see what's out there in terms of what's being shared by Zacks or whomever else writes articles about it, because that will go a long way to kind of rounding out the sentiment that the institutions maybe, but especially retail, goes into that earnings call with. And the expectations and the sentiment obviously are a big driver of the reaction. So to my mind, and again, this isn't going to be anything earth-shattering, it's mostly because I think companies at these growth stages have to just do very obvious things. Like the growth expectations around earnings calls are just sort of what they are for growth stage companies. So that's why nothing I'm going to say here is earth-shattering in terms of what I'm expecting. But also I should mention, I've had a few folks say earnings isn't what's important at this moment, but they're talking about literally like how much money they're earning. First of all, I think, yes, it is. I don't think it's as important as it'll be in 5 years, but but when we're talking about an earnings call, we're learning a lot more things than just how much money the company made. So I just wanted to say that for the sake of anyone being confused out there. But okay, here's my list of super obvious things that I'm looking for. A beat on estimates and on guidance. Significant user acquisition. This is the one that I've really been pounding the table on. I wish that they would go much harder and heavier at user acquisition, because they have this whole cross-selling mentality that like they're going to save so much on customer acquisition costs down the road and the lifetime value of the customer, because they can cross-sell into different segments that they are rolling out or that they already have rolled out. But to me, having just a bit over 2 million users, having been a company for so many years, I would really like to see them amp that up. If you have this model that you think will prove out so strongly in the future, go get those 20 million, 40 million users. Like, why we're sitting here in low single digits in the millions is the biggest question in my mind. So I'm hoping that there's major ramping up there. And I know it's been increasing quarter over quarter, year over year, but to me it's increasing like a snail, and it needs to really be bumped up significantly. No unexpected large expenses that skew an otherwise solid earnings call, like we saw with Galileo acquisition costs in the last earnings, and I think the cost related to the IPO, I might be misremembering that, but those couple of unexpected one-time costs that they incurred, that kind of helped potentially throw monkey wrenches into the whole thing, that caused that big sell-off. Hopefully that's just sort of not a component of this earnings call. And then, of course, any increase in guidance would be an added bonus to my mind. So those are the things that I'm looking for. Really standard, nothing spectacular. I mean, that would be spectacular, but nothing like super out of the ordinary. But that said, over the past month, we've priced in over 35% of good news in the stock price. So obviously something to keep in mind there. Shorts today coming down 3.34% per Ortex estimates, 8.46% of the free float being shorted at the moment per Ortex estimates. Days to cover sitting at 1.75, cost to borrow under 1, utilization just over 23. So not much movement here. And like I've been saying, video in and video out, I'm more than happy with that. So obviously the earnings call coming up on Wednesday, November 10th. Is that right? Wednesday? Yeah. At 5 p.m. I wanted to try to live stream it and do that, but it's too late. I have a young family. That's dinner time for the young family with the kids, and I just can't swap. Even though it's infrequent, I can't do it. So I'm sorry, but won't be able to live stream it. And I'll just sort of like provide my reaction to earnings on Thursday's video. Which will be fine. There'll be plenty of other folks talking about it Wednesday night and whatnot. But, you know, like I said, I just gave my thoughts, and I'm not sure that I'll do a video Wednesday prior to the earnings. Maybe we'll see what happens. It'll depend if it's just a super boring day or if something interesting is happening or whatever. But we'll see. All right, folks, I think that'll do it for this video. I hope your trading week got off to a good start. And as always, I appreciate you watching, and I will see you in the next video.